So does watching this
forecasts of blue chip and other private sector forecasters
make you do this? If you're like me, the words Federal Reserve Bank and interest rates being in the same sentence makes me... But if you are one of the many people who are looking for a house this spring, you should be paying attention. I'm Carol Ann with The Real Deal, and if you are one of those people looking for a house, you might be asking yourself, do I care if the interest rate goes up? Well, you should, and here's why. It is going to affect this coming spring market. Rates are projected to go up in 2022, and they've already started. They've gone up almost a point in the last couple of weeks alone. Why? One reason is instability in the stock and bond markets, making the 10-year treasury bills go up. There is a lot more that goes into that, but if I start going into it, it kind of sounds like... So I'm not going to worry about that now. Just know mortgage rates are loosely based on the 10-year treasury bond, amongst other things. And I think another driver is inflation, which we have all been hearing about lately. Well, when inflation starts to occur, the Fed has to suck money out of the system to keep it under control. And the way that they do that is to raise rates. And they have already signaled that they are going to raise rates this year. Take a look at this Federal Reserve dot chart. What is a dot chart? Well, a dot chart is a chart of dots that shows where each Federal Reserve official thinks that the rates should go in the future. So if you look at each group of dots, you can see where the trend is going. And right now, it's going up. So let's go back to basics for just a second. What is an interest rate? Well, simply said, it is the price to borrow money. Why is that important to you? Because it's the sum of money that you are going to have to pay back to the bank just for the privilege of borrowing that money. So just to give you an example, you want to buy a house that's $350,000. You put $50,000 down, giving you a loan amount of $300,000. At a 3.5% interest rate, the amount that you're going to pay back to the bank is $184,968.26. However, if you take out that same amount of money at 4.5%, the amount that you're going to end up paying back to the bank is $227,220.13. That's a $42,000 difference. And not only do you end up paying more money to the bank, but your buying power goes down. For every 1% hike in the interest rate, your buying power goes down by about 10%. Let me just show you what I mean. Let's just say you are out there looking for a house. You want a monthly payment no more than $1,500, and you have $50,000 to put down as a down payment. At 3.5% interest, the price of the house, the amount of house that you can buy, is $384,042. Now let's use those same numbers, $1,500 a month, $50,000 down payment. At 4.5%, the amount of house that you can buy is $346,042. $38,000 less. So that interest rate is definitely going to have an effect on your home buying experience. So what do these higher interest rates mean for the housing market? Well, one thing is it means that buyer demand should go down. We are in a high buyer demand right now. So maybe it means that the fight for the houses should get a little bit better. However, it also means that if you are a buyer on the edge, maybe you're just on the edge of being qualified for a mortgage, this could push you out of eligibility of buying a house. It also means that those high prices that we're experiencing right now, those could relax a little bit. Fewer buyers, less demand means prices might come down. Maybe. Now, I do want to take a minute to put things into perspective. Rates have gone up recently, but if you look at the last 5 years, we are still well under where we were 5 years ago. So in the grand scheme of things, the recent rate hikes that we've had are not that bad. So if you are toying with the idea of gently dipping your toe into the pond of the new housing market, you might want to think about jumping in head first before those rates get higher than they already have. Go see a lender. Find out if it would be a good idea to lock a rate today in case they're going to go up later. Just know that those rate locks are only good for so long. So if you get one, you better get out in the market and find that house. And for those beleaguered souls out there who've been out there for months and can't seem to find that right house that doesn't have 15 offers on it already, just keep trying. You will find that house. So I hope that helps you understand why interest rates are so important when it comes to the housing market. If you like this video, go ahead and watch this one that YouTube picked out just for you. Thanks for watching. See you next time.